The idea of trading a six-figure account and making tens of thousands of dollars per month has never been so achievable until now. Prop firms have really changed the industry and how people think, but that begs the question, why are so many people unable to capitalize off of this opportunity? In this video, I'll be sharing 4 pieces of advice which will reshape your mindset and the way you approach the market. Now, this video is not going to contain any sort of fancy edits or background music because I genuinely want you to focus on what I'm about to say, as I believe this is what is causing most traders to become unprofitable and lose these prop firm challenges. Before we get into it, this video is sponsored by Funded Next, which is a leading prop firm in the industry. They are the only prop firm which offers a 15% profit share from the challenge phase. On top of that, they'll give you a guaranteed payout within 24 hours, or they'll add an extra $1,000 on top. And their most popular challenge, which is the Stellar Challenge, has only a 8% profit target in phase 1 and a 5% profit target in phase 2. So if you guys are interested in purchasing your own prop firm challenge, click the first link in the description down below and use code Nayra7 for 7% off. Now, the first concept I want you guys to grasp is the fact that trading is a loser's game. Now, what do I mean by that? Well, there was an observation made by a scientist where he observed professional tennis players and amateur tennis players, and he concluded that 80% of the winning shots were based off a attacking position. And when he compared it to amateur tennis players, he concluded that 80% of the winning point was a defensive shot. Now, what does that mean? That basically means that when they reached that high level in tennis, majority of the winning points were based off a offensive shot which won them the point. Whereas for an amateur player, if he just played it safe and played defense, the other person was most likely to screw up and they'll end up winning the point. Now, when it comes to trading, it is a similar concept. When you are a trader, it is a loser's game. So you need to make sure you're playing defense as a trader. You are preserving your capital. You're not FOMOing into the markets. You're not doing those bad habits where you're over trading or you're over leveraging, and you're just preserving your capital and playing defense. And that you will see, just doing that will decrease your learning curve and increase the likelihood of you becoming a profitable trader. Now, yes, it's easier said than done, but just adopting that mindset and understanding that preserving your capital in trading is the most important thing, even more than making money, that's when you will start improving your trading and picking and choosing the high probability setup, because sometimes the winning strategy is just in not taking those losing trades. Now, that leads me on to my next point, which is markets are an advertisement. Now, when you're on the charts, the markets are constantly advertising different prices. Now, it is upon you to dictate and decide when exactly you will be entering the charts. Now, if you don't have a plan, you may fall victim to the prices. You may see a certain price limit which you find lucrative, which you feel like is a good opportunity to enter, and little did you know it was a premium price you was paying for that certain instrument. And so that is why it's very important to be able to identify premium and discounted areas so you're able to get the best possible deal, as the markets are always constantly trying to advertise to you, and it is important that you're not able to get lured into the market. Now, this is why it's extremely important to be selective of the trades that you're taking. By picking and choosing only the highest quality setups and picking and choosing discounted and premium areas to either buy or sell at is the ideal way to move forward, as it will prevent you from falling victim to the market. Now, as we all know, markets are driven by fear and greed. If you're able to control these two emotions and prevent them from coming to the surface every time you're taking a trade, that will help you become profitable in partial prop firm challenges. Now, understanding that when you are entering a trade, the only two reasons really when it comes down to your psychology why you may not be following your rule is either because of fear. You fear that you might miss the trade, it might leave without you, or you fear the fact that if you enter the trade, it will end up being a losing trade. It can either be that option, or the other option why you may end up entering into the trade is due to greed. You don't want to miss the trade. You don't want it to leave without you. You want to make sure you can capitalize and maximize off that trade. And so you're even willing to take a worse off entry, or you may be even willing to enter off at a worse off area. And so that greed factor comes into play, ruining your strategy, which would have maybe played out nice and profitably had you been following it. And so understanding these two concepts, the fear and greed concept, and putting into a psychological plan as to how you're going to control these emotions, it will help you avoid those unnecessary losses which are mainly caused due to your psychology. Now, the best way I found that helped me avoid fear and greed was having a solid strategy which I could be confident in. If you're confident in your strategy and you're able to follow it to the T, then you will not really be feeling those emotions, because you know, if I just followed my mechanical strategy strategy and do as it's told me, then those elements won't even come into play. I won't be fussed if I end up missing the trade, nor would I be fussed if it hits my stop loss, because trading is a game of probabilities, and if not this trade, the next trade will definitely come around and be a winning trade and put me net into profit overall. Now the last and final tip that I would like to give you guys to make sure that you're able to pass your prop firm challenges is to double down on your strengths. Doubling down on your strength means identifying what you're good at, understanding that if you're better and more profitable on certain pairs, to double down on that. Understanding if you're more profitable during a certain session, to double down on that. Understanding if you're better at sells or buys, to double down on that. And by doing that, you're going to tremendously increase your profitability and avoid those losing trades which you're always getting caught up in. So for example, if you know that you're always getting caught up pre-New York session and you end up taking a trade not within your kill zone and you become a part of the liquidity, then you know not to be trading during that time and to avoid it, and instead to focus on what you're good at, to focus on the certain setups that you're taking, the certain playbooks that you're extremely confident in. Because sometimes when you're taking those trades, you know that these trades you've taken time and time again and you're really confident in those. So why not double down on those sort of scenarios, those sort of playbooks, and be profitable in that? These are some of the tips which I use personally myself, and some of the mindset hacks which I use myself to avoid these unnecessary losses and to try and avoid these losing periods during the market, and to help me pass my prop firm challenges. I hope you guys enjoyed this video. If you did, make sure to comment down below your thoughts on these tips, and if you want to watch more psychology related videos, make sure to click over here.